one of your columns, you mentioned that everyone knows the price of silver, but not the value of silver. And could you expand on that a little bit in terms of taking a step back, what it is that we should be looking at? Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. As we continue digging into the silver world, where the price has been in a bear market over the past couple of months, although fortunately to dig into that and share what he's seeing, I'm joined by David Smith of the Morgan Report, as well as the Load Project. And David, great to have you on here today. How's everything going with you?
It's good, Chris. A little more heightened state of awareness than normal, if that's possible, given what's going on the last few months.
Well, it has been a little bit challenging to watch, although I guess the first thing I'd like to run by you is that even though gold is down, it's still in relatively high territory historically, yet silver really hasn't kept pace. And I was wondering if you had any thoughts on why that might be.
Well, there's so much going on and so much is tentative. I think that trying to figure this out inside the bubble bowl, which I think all of us are in to a large extent, or either inside or looking into it, is something that is beyond the ability of any of us other than someone who is lucky and even beyond skill to interpret with a high degree of likelihood of getting it right, of not being wiped out, of not losing an arm or a leg trying to figure it out. And so my feeling is, and I'm going to mention a couple things that I saw within the last few days, which give me some pause, that I think, I've always talked about buy 2 or 3 tranches. I'm thinking about becoming a 10%er. Buy a 10 tranche and finally get 1 or 2 filled. There's so much possibility of a complete contagion and a complete loss of the ability of the markets to determine value. What is price discovery? Tell me something in the price discovery matrix called trust, called confidence, called belief, called confidence in your fellow trader or man, the closest trader to you, that indicates that you will not be wiped out accidentally or on purpose. And I'm worried about that. And I think people can do a few things that are completely outside their box and maybe outside of mine until recently to put those odds in the favor. And one of them is to stand outside or be outside and look outside that matrix and try to see with different eyes than maybe we've ever seen before. And maybe see something either because it hasn't been there and it's newly operative, or it has not revealed itself fully yet.
And perhaps you can explain that a little bit more in terms of, I know a lot of people are used to the way things trade and the way things have been going and seeing silver at a lower price. And one of your columns, you mentioned that everyone knows the price of silver, but not the value of silver. And could you expand on that a little bit in terms of taking a step back, what it is that we should be looking at?
Well, there are any number of people out there, including several that you and I listen to, including yourself, that are more knowledgeable about COT and overbought and oversold than I'll ever be. I use them kind of effectively from time to time, but I don't think that that's enough. For example, I just saw that Zimbabwe is developing gold coins and able to help, keep being wiped out from inflation. And of course, we've had several places like Nigeria and El Salvador and whatnot that have developed some kind of altcoin or Bitcoin. And then there's a lot of informal ways of trading blockchain we don't hear about, but they all detract kind of like a death of 1,000 cuts from what we think of as payment system, of trust, of honesty, of delivery of what you say you're going to do. Bob Hoy, every few weeks, Bob Moriarty posts on his charts. And what he said, I'm just going to read a sentence here. He says, the ensuing, this is a sequential 9 buy setups, 9 consecutive up bars with closes below 4 bars earlier. The ensuing day saw our exhaustion index, which measures the strength of trend, in this case a downtrend, pushed to major oversold extremes in the XAU, HUI, and Newmont. All 13 examples in the last 3 decades saw replacement rallies to the 50-day moving average within a month. Double bottoms were quite common. And then also, I saw something else here. Jim Rickards was talking about the Fed wants to go another 75 basis point rate hike. And somebody, maybe a little sharper than these guys at the Fed, determined that this 75% base hike could have an effect of several X times the power of the 75%. I mean, it could be like 2% effect. Now, if that were to hit the markets, I'm not sure how well the markets could handle that. And this could bring something out of the woodwork that would just be, catastrophic. I'm not predicting. I'm saying it could. And if it could, Chris, I don't want to be involved in that. I don't want to be buying a third down and then see it drop another 70%. So people should look at that and say, how does this fit my model? And not only that, but I'm now outside looking in. I'm not looking at the COT for guidance. I'm looking at something else. And so that's something I wanted to share and get people to think about that. And other things maybe have recessed, but they're not quite that important. But that's a couple things to be done. And so my thinking is, now if this sort of thing happens, in 2008, I was up in Yukon on a 10-day tour looking at mines up there in miners, watching a 300-ounce gold pour, doré pour, and silver hit, I think it was 12, and I was doing some futures, and I thought, 12, I think that's about it. So I bought, and maybe I bought physical, I can't remember. A few days later, it was 9. Well, we got to the point where nobody's going to pay 9, and I think if these prices hit some crazy price, gold, silver, platinum, palladium, like they did in 2008, they stopped trading. I don't know, platinum. I think platinum was quoted at, I don't remember what it was, 600-700. Nobody was paying that. They were paying 400, and people are going to quit buying. Big hedge funds, anybody, small people, and the metal sellers are not going to sell metal at 9 and try to replace it $20 higher if they can get it. So I think that lady that presumably bought all those Krugerrand or American Silver Eagles is trying to or have. I think we're going to see outside the box thinking by institutions, by individuals, by businessmen. And I think if these prices get crazy and they go to 6, I think somebody's going to go to Keith Newmar and say, look, Keith, what's your break even? Add $5 or $6 to the premium and give me 1 million ounces of your trade rounds in 90 days. And here's the money down for it. And if they're willing to do that, I think people are going to go to the miners, and I think they're going to start buying outside, and they're going to be outside the bubble in their own buying, and they're going to eviscerate the walls, the paper firewalls around the paper traders. You're not going to be able to go in and do a frontal attack. You're going to have to surround them with these moats and start battering them with the battering rams of getting rid of supply so that they can't get into them and they can't even take it with paper. So I think price discovery will start to become organic by outside players, everybody from small players to people that want 50 million trade rounds of whatever. Does that hold any water in your view?
Well, it makes sense what you're saying, and as you were saying that, I was thinking about how there is probably a difference in mindset between, an average retail buyer who's not necessarily independently wealthy versus a country or someone who has great wealth and is looking to protect it and sees what's going on. And I wonder if that's the type of thing that we could see. We did have that one big order that came in a couple of weeks ago. And do you think that's it, where some of the folks that have larger amounts of money to invest and are not necessarily looking, well, I want to get silver for $18, hope it goes up to 25 or 30 and then sell. But just if you have a large family fortune or similar to what we've seen Russia doing with gold at times, where it seems like it would be a different mindset, and I could see that happening. Is that a bit what you're getting at?
Yeah, and I was reading today, and I don't know, I may have read this earlier, but I don't think so. But Kinross is acquired Great Bear for a pretty big premium last year, and they are going to apparently develop it without attributable gold ounces, and without establishing exactly what a feasibility or a PEA is. And this is something I've known a couple operators that most people aren't aware of that have done it successfully, and they're low risk because they know what they're doing. But you can look at something like the troubles that Pure Gold is having, and so we looked at them very closely, and they vetted everything, it seemed like. And what did they do? They ran it into 9 cents a share from a couple $3. So just because you do the PEA and the feasibility statement doesn't always mean it makes sense. And there are a couple of other deposits I know about that I think should be done that way. That can knock years off of development. That can get product out there. You can stream it if you want. You can start selling it retail. You can do all sorts of things. And instead of 5 years, 6 years to develop it, you got it going in 12 months with a scale-up operation that has a very high probability of success. And the project is so rich that if it comes in a little under what you expect, no worries, as Canadians say. So I just think it's going to take a new set of tools that we're not used to, that people are going to successfully do, just like they've come up in tech. They're going to make things work, and people are going to look back and say, wow, look at that. He created a whole new way of dealing with gold and silver acquisition, and he did it outside the COMEX. Trying to go inside the COMEX and duel at the heart of the beast is something that is fraught with danger and really puts the odds against you.
David, you had a quote in one of your articles from Luke Groman where he said there are a few moments in history where you want to own gold, but during those moments, gold is about all you want to own. And then you mentioned that moment is just about here. I'm wondering what you think the spark might be. I mean, especially with silver, we've seen a lot of inflation. We've seen situations from the central banks that don't look good. Is it that you expect there's just some point where that breaks, leading to the environment you just described, where people are scrambling to get silver, especially with silver? Perhaps what I imagined happening was that since most of it's consumed, you have that little bit left at the margin that, if people really pile in there, seem to me to be the kind of thing that could drive the price. Is that a fair way of putting it?
Yeah, it is. But if you have a little bit of a participation in the span of what can be, that little participation can end up becoming a tail that wags the dog if it's really successful. And I think it will take creative thinking on the part of all of us, and bullying back thinking too, of taking less risk, like that 10% thing, to survive. And if we do 10%, we can be wrong 9% and get it right the last time and do all right. And so cherish what you have, be less active than you want to be. Don't try to influence everything, and really, really listen to what's going on.
Yeah, and another thing that you mentioned, silver will treat you well as insurance first and profit second. That's certainly something that I've been thinking about a lot in the past couple of months, where, again, expecting a higher silver price due to inflation, not seeing that. Is that a better way for us to update our thinking, in that silver, we're hoping to have it, that if you do have some sort of chaos where people are fleeing fiat currencies, then it's an insurance? Is that a more realistic way for silver investors to be approaching this right now?
Definitely, and really believe it, and quit thinking it as an expense. You don't want to go on margin. You don't want to get too much. It's an essential. And no matter what happens as we go through this cycle, I'm going to see if I get a chance to write about this. But I think we're going to end up ideally selling 70% of our silver by the time the cycle is over, and we're going to end up with the insurance piece again, like it was originally, and we're going to end up with a few beautiful coins that we love and a little bit extra. And we don't want to be at the end of this, because it will end and it will come back to quietude. We don't want to end up the silver that we've had for 30 years and try to hold it another 30. Most people just aren't going to be able to do that. And this may be the last really big, massive opportunity we have literally in our lifetimes, because things like nanotechnology and other things will completely change the face of how we evaluate these things. So I think it's an opportunity not to be missed and not to be overstayed.
And when you talk about selling 70% or whatever the percent may be for someone, what does that environment look like, and what do you think you would be selling it for?
Well, rather than put price targets on it, I would say something that recognizes the time I've spent saving it and being ready. And, these figures could be 100%, 2% off. I'm just throwing this out. Don't say, oh, that's the figure. But, when this metal finally takes off, we shouldn't be selling half our metal at $32. We should be selling, if we believe in this, we should be selling a certain chunk at 48 and another chunk at 75. But we don't want to wait forever either, because, Jeff Clark and others have shown that these things don't last forever. They last, 4 to 6 months, no matter what. And palladium is one of the very few so far that has broken that model. I've written about it several times. And I do think that it'll resemble palladium, and that wherever it settles, it'll be substantially higher than we think. And it won't be $28. It'll be a couple times higher, and it'll stay there for quite a while. But again, the really, really big money you want to punch out when there's nobody left to sell. Everybody wants to buy. And that's, by the time it kind of gets out there, then, suddenly there's a $30 spread. I think people were trying to sell silver into 1980. It posted 50 pretty close once, and I think they were getting 34 for it on the street. So we don't want that. And all the metal that has been accumulated, at some point that's going to weigh things down and at least short term flood the refiners. That's just what it is, even if it just lasts for a short time. And there'll be punches like that. There'll be places where it'll sell off $10, but it won't be over. So we're demanding a lot of people to kind of get it right, but I don't think it's too much to demand. And if you've held this long, you owe it to yourself to try to get it right as much as you can. Have the plan, execute the plan to the best of your ability. Don't beat yourself up, and do your best, and you'll do fine. You'll do okay.
Yeah, and the last question I have for you, David, you just mentioned 1980, and I'm curious what you think has been different in this more recent cycle where we've seen stagflation versus 1980 and 2011 when we did have silver hit $49, $50. What do you think has been different so far this time?
Well, several things. The magnitude of the potential move, which is, in nominal dollars, is going to be huge. The dysregulation of paper silver and real silver, which has gone on for several more decades that we never dreamed would happen. The overweening pride and not pride, but hubris of the paper people. The elements involved in acquisition of the metal. The fact that this is a worldwide phenomenon. It isn't just 5% of the U.S. holders and a few Arabs and a couple Brits. Everything is on the scale, literally of a magnitude or more larger, not to mention all the other things that impact this that don't seem to be related. Food, fertilizer, attempts to manage the world economy in relationship to what others believe in and things. So I can't think of anything really too much that is either the same or that existed here or that is the same power. So it's just superlatives all the way across the board.
Well, I think that's wise advice. And again, people can find your writing as well at themorganreport.com. And just appreciate all that you've done in the silver field over these last couple of decades and sharing your knowledge and also good perspective and just keeping things in balance. And thank you again for joining me here today.
I will, Chris. Thank you so much.
Well, thank you for that call, David. It's always good to catch up with him with his calm, reasoned approach, and certainly having gone through many of these cycles and seeing this from before the spike in 1980. Always fun to check in with David. Before wrapping up, I'd also like to thank Fortuna Silver for bringing us today's episode. And I wanted to pass along a quick comment from Paul Whedon of Fortuna Silver, who was on the show a little while back, where he talks about some of the recent results from their Seguela Gold project.
This is a project that was acquired by Roxgold back in April 2019, and we had a very small, modest 400,000 ounce maiden inferred resource back then, whereas today we've got 1.1 million ounces in reserve at a life of mine grade of 2.8. Now that's a tremendous amount of growth that we've put into that project in 2.5 years, coming on to 3 years now. And to take it now, as Jorge said, we've got the plant which is more than half built. What we've seen though in that journey from exploration is the continual discovery and generation of new high-grade pits. Now, we started off with Antana, which was a great pit, and it's the foundational pit for us. But very quickly, as an exploration team, we moved then into Ancien, which is a 4.5 gram open cut. And then we've made the next discovery 9 months later, which is Cooler. That's a 6.5 gram open cut. And then more recently, we've had Sunbird, which is what the most recent press result is. And that's going to come out at somewhere around about 3.2 as the maiden inferred resource. Yet the grades that we've published recently, the 18 grams over 11.9 meters, that's quite typical of the sort of grades we've been getting out of much of these high-grade pits. So, where are we 3 years down the process? I think we've still got a long way to go, to be honest. And as an exploration team, we are really only just scratching the surface. We've got more than 30 targets left to go and test.
Well, thank you, Paul. And to find out a little bit more about what's going on there, well, the full clip is coming your way now.